And think this way, that these big entities, these big corporations, they have their own legal department, they have lawyers. So they will make sure every word they draft on the life insurance application are in compliance with the law of that particular state, right? So they wouldn't do business just like that, and they are being audited from time to time. So nothing is illegal, but I'm just giving you a different perspective as to how the different dots are connected. So it's out there, it's legal. You can go to any of these websites and see for yourselves. So know your rights and be practical. Now when I say be practical, legal aspect is out there, but how do we try to be practical to help ourselves? That's the point. And in this presentation series, I'm going to spend some time to give you some practical ideas and practical tips. You can think through on your own and see whether it makes sense or not. So I'll share a few examples based on what we notice in our everyday routine. All of a sudden we see that you lost, as a customer, you lost 50 pounds or 90 pounds. 6 months or 4 months ago you applied somewhere, you were 5'9", 5'9" and 170 pounds. Today, and 4 months or 6 months ago you were 240 or 270 pounds. You were a smoker 4 months ago, and now on this application for particular company where you are applying as a customer, you all of a sudden are a non-smoker. Is it possible? Possible. But think through. And in order to avoid the routine age and face amount requirements, you apply for the small amount so that you anticipate that we will not investigate further. But it doesn't work that way. So when you are prompted by any home office underwriter that they need pyramid exam, so what that means, that they are telling you nicely that what you may not have admitted on the application, pyramid exam is a medical questionnaire, so that gives you an opportunity to realize and admit what you might not have admitted to begin with on the application. Just like that, phone interview is another tool that nicely and professionally the home office underwriters are using to tell you that, do you recall if you have missed anything to begin with on the application? Now, having said that, it does not necessarily mean that every time if a pyramid exam is out there, that means we are suspecting that you as a customer did not admit any of these things. No, it could be based on the age and amount requirement, it could be based on because you admitted you are obese or you have high blood pressure or some other conditions and we want to connect the dots. So it could be ordered for a cause, not just because there is a lack of candor. Same thing can be true with the phone interview. Another unique thing about the pyramid exam is this, that remember I was referring to MIB network, the Medical Information Bureau, and how they share those details amongst the members. One of the requirements before we investigate further the MIB code details, technically speaking, it mandates that we have to have pyramid exam as a part of the process, which means that MIB encourages companies out in the industry to make sure that we just knock their door frequently to say that we need MIB code details, right? So they would want to make sure that at least we order pyramid exam or phone interview, specifically the pyramid exam, because it gives the opportunity to our customers to rethink, to recall if they have missed or if they have not admitted something on the application. Okay, so pyramid exam has that additional color of being mandated by the MIB before we get into the MIB code details. MIB code details is beyond the scope of this presentation, so I will not go into that details. it this way. You go to American restaurant and you order your favorite Chinese food. Common sense. There is a possibility that your favorite Chinese food, you may not get it in the American restaurant. Now why is that? Because American restaurant sells what they have in their menu. They may not have your favorite Chinese food. Take a pause, in any industry, whatever products they are selling in the market, for each product there is a price tag. So life insurance industry is also selling just like any other products, a very valuable product to protect you and your family, right? In the financial planning, in the estate planning, for variety of reasons, God forbid something happens to you, to take care of the surviving family members. So life insurance industry, in the life insurance industry, every life insurance company is also selling a product. That product could be a simplified final expense policy. If you go through no, all the questions, and if so, no need for blood, no need for urine, it just flies through. Final expense simplified products. Some companies may be selling 5-year, 10-year term products, some may be selling a permanent plan, whole life policy, universal life policies, some may be selling second to die policies. These are the different products. And the way they are priced based on their own claims experience, based on their own actuarial statistics, based on their own data, based on their own research. So different companies are looking at the same medical records. One would come up with a table 2 or table 4 or table 6. They all have their in-house medical doctors, yet. Why is that? Because their experience is different. So you cannot go to American restaurant and insist to have a Chinese food just like that. You cannot go to a New York Life and insist to have something that Lincoln Financial or American General or Allstate or State Farm sells. Right? In America, you will see there are many states where they have a Dollar General store or a dollar store. They sell cheap items like for $1, $5, $25. They have a limit, whatever the limit they may have. Now, you want to buy something very expensive. What do you think? You go to that cheap store where they sell anything and everything in the store. The maximum they sell you can buy is of worth $25. But you want to buy something that is worth $50 or $100. Do you think that you will get that expensive item in that cheap store? The point is, simplified products or different products, companies are pricing their products based on the data and the details and the death claims and the experience that they have. So, for example, let's say you are buying a $20K or a $100K or $1 million or $10 million policy for which you are ready and willing to pay the premium of $50 per month or $500 per year, or maybe depending upon the face amount, higher the premium or whatever premium that you are ready and willing to pay. Let's say for a $10 million policy that you want to purchase, your premium comes to $10,000 per year. Okay, but companies have their data that limits up to $5,000 or $6,000. So if you are a standard risk, the company may say that your annual premium would be $1,000. If you are a substandard risk, your premium would be $3,000. If you are a highly rated, almost close to a decline, you may be at $5,000 annual premium. But if based on what they know, given your medical and other details in the file, if you are at 10,000 premium yearly, they don't have any products to sell to you. So when they say you are a decline, doesn't necessarily mean that you are going to die tomorrow. It only means that they don't have the products that they would want to sell to you. So they have limitations of the data of their own experience, of their own predictive models, and hence they are unable to sell anything to you. Just like you don't buy, or you may not find a Chinese food in a typical American restaurant. Maybe. Right? So in individual life underwriting, 1 and 1 and 1 may mean 111. So you have a diabetes, okay? You have a heart attack, okay? And you have a stroke. So these three things doesn't simply add up, but it just multiplies, it just accelerates, and it comes to a point that majority of the companies would, with those three concerning element of your medical profile, would more likely decline you, as an example. And there remains a difference between clinical practice and insurance medicine. Your doctor may say that you have had a mild heart attack or a mild stroke, or your blood sugar is elevated, come and see me after 3 months or 6 months. We, in the life insurance industry, the home office underwriters cannot do that. We have to decide right there and then. So the doctor will tell you that you come and see me after 6 months or 1 year. How do we say so? We just decline, unfortunately, because we don't have any data to price the extra mortality associated with what medical profile you are bringing through your application here. Okay? So think about these details and see whether it makes sense to you or not. I'll give you a couple of other examples. Let's say you apply somewhere and you got rated or declined. And why is that? Because your blood sugar is very high. So the company may say, based on their own company specifics, that either you have to pay extra premium or we can't offer you anything. Now as a customer, I would not worry about the life insurance. I would worry about my life. Because in life insurance, life first and then insurance. So worry about your life first. Go and see the doctor, get your blood sugar level under control. And you can feel better, you can live longer, you can live healthy life, right? And then you can always, after 3 months, after 6 months, after 1 year, you can always go back and apply for another life insurance through same company or a different company. Let's say your PSA, the company turns you down because of your elevated PSA. Who knows that elevated PSA could be early sign of new onset of a malignancy or a cancer, prostate cancer that you may have. What matters more to you as a customer? Finding out whether you are really having prostate cancer or not, or insisting and arguing with that company and blaming that home office underwriter that my doctor says everything is fine, we will monitor your PSA and come and see me after 6 months. If needed, we will do the biopsy. Doctor goes through the process of differential diagnosis. They just don't come up with the final diagnosis one fine morning. They wait and watch depending upon what it is. It may take a couple of weeks to a couple of months, maybe 6 months, maybe 1 year. All of a sudden you lose weight. Doctor may say no big deal. Come and see me after 3 months or 6 months. But we do care because we may feel, and you ask your doctor, is it possible that you may lose weight for no reason? Because that could be an early sign of the new onset of a potential malignancy or a cancer that may be coming. It may be a possibility. So we are dealing with low blood number, so we have to respect those findings and we wait and watch. So think this way, if you are buying auto insurance or home insurance, let's talk about home insurance. If your home is on fire, you think any company out there in the industry would cover your home insurance? Would give you insurance to cover your home if your home is on fire? Just like that, if your blood sugar or your PSA are elevated and are of concern, unfortunately we will have to tell you we cannot provide any coverage at this point. Come and see us after 6 months, 1 year. One survey that was done in 2017, there were 781 US life insurers. As a customer, the best thing to do is be upfront, honest, don't hide anything, tell the truth whether you got MI or a heart attack, whatever the case may be. Let these companies compete amongst themselves. Because in American restaurant you may not get Chinese food, so one company may not sell the product that you are looking for, so try somewhere else. Remember the threshold settings, that we don't order EKG, we let go intentionally some potentially adverse cardiac cases, but